Recently, I did an interview with Strati. If you click the link below, you can learn about him, how he got to around $800,000 through the ups and the downs, and he's also the lead trainer on Inner Circle. I highly encourage you to watch that first video before you watch this one. This one, he really got fed up with his recent losses, and he decided to just cancel all of his weekend plans. He stayed inside and he dug into the stats of what he was doing wrong. Jack Kellogg is with him, and in this video, the whole video is for Inner Circle students, but I wanted to, share some of the video with you guys because I think that is just incredible. So I'll post a link to the whole interview that I did with Strati. I'll also post a link to the Inner Circle. In case you don't know what the Inner Circle is, that's for challenge students only, but it's like the challenge on steroids because you get everything that challenge students get, but there's also Zoom phone calls, there's a separate chat room, and we're doing in-person meetups. The next one is in Mexico in a little bit. I'm excited. Jack Kellogg will be there. Mario will be there. David Hanlon will be there. Omer will be there. We've got a lot of people. Oh, Clay, the new millionaire. So we're a very close-knit group, and Strati is the lead trainer. So wait and see exactly what he says in this video. He's so introspective and he's so hard on himself, for better or worse. But in this video, you'll see how Jack and Strati look at their trades and really dig down deep, and they drill down to figure out what they're doing right, what they're doing wrong. This is the kind of intense, self-discipline and reviewing that you should do with your own trade. So I think this is a great example. Like I said, this is just a small portion of the full hour-long video. That full video is for Inner Circle students only. Inner Circle students get everything. They get all these exclusive extras. So I highly encourage, if you want to take your education to the next level, join Inner Circle. Only if you're dedicated, though. But please watch this video, take notes, congratulate Strati on his success and his brutal honesty. That's what it takes. That's why he'll be a millionaire soon. Stay tuned.
What's up, guys? I am here with the man, Jack Kellogg. It is time.
What's going on?
We are doing the big review that I've been building up with Tim. If you guys were on Twitter, you saw that he called me a bitch and that I've been a bitch lately. And it's definitely true. My February was the greatest month I've ever had, and then my March was the worst month I've ever had. So there's really two ways I could go about this. I could sit around and mope and keep trying to force trades and force the issue, or I could take a step back and do a little bit of reflection. So that's what we're going to do here. So basically, my February, 129,000 in profit. That was a new best. And then we go to March, and at this point in the month, we are down 39,000. That was tough to see. So you start to wonder, people, I think they're going to start blaming the market, which it did slow down. It did become more of a bearish market. There were less opportunities, but I still don't feel like, I don't know, Jack, if you agree, you can't blame the market for your problems. You have to adapt to the market. So if I saw things were slow, I could have easily sized down. We're going to see everything in the spreadsheets, but I didn't adapt. So I can't blame the market conditions. I still have to take credibility for what went wrong.
Of course, you got to take credibility. Everyone knows there's an infamous trader on Twitter who is constantly blaming the market makers, blaming the stock, blaming the route, blaming the lag, blaming everything, and that's no way to live, right? Same thing as a relationship. Say you and your significant other get into a fight, and the person who is in the wrong just constantly starts defending themselves by blaming it on other things. So oh, you came home too late, right? Whatever, you came home at 3 a.m. and you said you're going to be home at fucking 11, right? And then you say, it was because of my friend, or my phone died, or whatever. No, you got to take the responsibility for what happened. You know what I mean? And I think people who are more successful at trading are people who take responsibility. Because once you take responsibility, you're putting what happened in the past and you're learning from it. And that's the difference. People who don't move on and learn through transparency and through analyzing themselves and what went wrong, they are doomed for failure, especially in the markets, because you're going to keep making that mistake over and over and over and over again until you do this type of deep analysis that Strati is about to go through. And you're going to see exactly what it takes to level up in this game, right? Strati's at a certain level in his trading journey. Obviously, he's done very, very well. And same thing for me. I've done very well, but there's always a next step to take, right? There's always a next step that you can take, unless you are literally Warren Buffett or Steve Cohen or one of the greats or Steven Druckenmiller, right? Unless you're one of these guys, then I don't know where more you can step. But there's constant potential improvement that we've seen people literally make, hundreds of billions of dollars from trading, right? Slash investing. Being at 700,000 or me being at 17 million, yes, it's a great start. But if we get complacent, we are not going to move forward. So this is what it takes. It doesn't matter where you are at your journey. I don't care if you're up 2 grand. I don't care if you're up 100 grand or if you're down 100 grand. I don't care where you are in your journey. You need to be doing stuff like this to take that next step.
Yeah, no, I totally agree. So we'll just into it. So I am not a spreadsheet guy. I've never made one. I don't even know how I manually typed in every date. I typed in every period. Every single thing was by me. It probably looks ugly. There was probably an easy way to do this quicker. This took me 3 days. Stayed up till 2 a.m. the last 2 nights, up at 8 to do a little bit of trading. And then from 11 a.m. on, I went right back to these sheets, and it has been hell, but it was worth it. I think, Tim tweeted, "Who's going to be disciplined and meticulous in your trading today? Retweet this if you promise you will be today. No degenerate gambling or irresponsible hodling." So I was doing all of that. I was being undisciplined. I wasn't being meticulous in March. So I could have kept trading or I could have stopped. I could start sizing down, and I said, let's just take the time now, because when things are hot, right? Like when the bars look like this, like February 130K, January 70K, December 102K, 80K. I am not going to be studying in depth those months. Those are the times to work, in my opinion. That's when you're going to bed early. You're getting up at 4, 5, 6, 7 a.m. You're pushing size right out of the gate. There's trades all day. By 4 o'clock, I don't want to look at anything. Now, with the market cooling off, the SPY way off the highs, there's less opportunity. What a great opportunity for me to just try and do some data. Like, I'm a discretionary guy. I do a lot of field trading. And if there was ever a time to say, fuck it, let's just see what happens, this is what I did this week. So this has been my project. So the goal of these sheets was to define what I'm looking for. So like, I had a problem and I want to solve the problem. So my problem is over trading. My problem is oversizing. So I do like to size up on trading a lot, right? And I saw this tweet from Lance, who's a good friend of Tim's as well. And he said, yes, you do absolutely want to push size in your best setups, but never so that if it doesn't work out, it negatively impacts your brain. Optimal growth equals a very precise sizing range. Size enough to be a little uncomfy, but not enough to hurt psychology. So for me, my problem is when I lose, it's usually bigger than I want it to be, and this fucks up my psyche. I'm a very big trader for flow state. I love being in a good flow and a good rhythm. The way to do that for me is to keep winning all the time, not losing big when I'm wrong, because big losses are the losses that throw me off my game. So for example, guys, I'm going to show you very funny. If you think it's funny, that's cool. It's not that funny to me. So we go back February. We end February with a $15,000 win. One trade that day, PepG. And that day I finished the trade. It was the last day of the month, best month ever. 4 o'clock, I'm sitting at the desk and I see VSTE pop up with a PR after hours. So it looks like a Saturday the 1st, but that really gets logged into February in the afternoon. And what happened was is I oversized a news play that I shouldn't have been in the after hours, and I lose 6K. And once that happens to me after being on such a good run, right? 25K, 22K, 3K, 15K, right here. This absolutely fucks me up. This is completely opposite of what Lance said. Size enough to be a little uncomfy, but not enough to hurt psychology. I take too much size that when I lose, it fucks up my psychology. So the goal here is to really see how bad I'm taking risk on some of these trades and if it's even worth it. So when I tracked these trades, I took every trade from the month of March and every trade from the month of February. My best trades, my best month ever, and my worst month ever. So let's just start there because they probably summarize my last 3 years anyway. It's a lot of the same habits. If anything, just more size. So I tracked every trade, February, March. The key in the tracking was two things. It's how much volume do the tickers have that I'm trading? Because sometimes another problem I have is getting caught in low volume trading. Sometimes I'm like 1% of the volume, 10% of the volume, and I'm not even trading that much shares. Like I love to try to get in before other people do. I love having that tight risk reward, but more times than not, as you're going to see, it just screws me up. So it's really not even worth it. It's better to get in at higher prices when there's volume versus trading lower prices when there's no volume. So that's always been a problem for me. So I tracked how much money I was putting into all the trades. So we're going to see how much I'm putting in my winners versus my losers. I tracked what time of day, I tracked my P&L, and the key factor that I tracked that I looked for was potential risk. So potential risk is something I thought of, and it's not how much I lost on those trades. It's different from the P&L. Potential risk is what I could have lost had I been wrong and I wasn't proactive to sell. So that's what I do a lot in my trading. I oversize things. If they work right away, I get away with it. And then when they work, I look like the man because I have all the size, I'm right, and it's cool. I make 15, 20, 25K, nice. But when I'm wrong and there's no volume and there's no perk and I'm the one stuck with all the shares, I get screwed the most. So I was really curious to see if the big size and risk I'm taking is even worth it. The other thing I tracked was day trade dollar volume and the previous day's dollar volume. So I do a lot of multi-day trading. So like Tim Sykes loves to trade stocks that are hot on day one. They get a fresh PR, a catalyst, and Jack trades them the end of day. I like to trade them a day or two later to see if they set up multi-day breakouts, bounces, getting in at a little bit of a safer price when things cool off and seeing when things heat up again. And that if when they heat up again, I'm the first guy there, which is cool. And I get caught up in a lot of low volume. So I wanted to see how my wins did on certain volume days, right? So this is a clusterfuck of trades in March, and this is my clusterfuck of trades in February. I thought for the sample size, we could narrow it to the top 10 trades of both February and March, so about 20 tickers here, and the biggest losers of February and March, which is tracked here. And like I said, the main thing I was looking to research in this time was how much I'm putting in, how much I was potentially losing, and what was the volume bucket. So volume bucket is how much dollar volume it did. So if you see greater than 10 million, that means that the day before I took the trade, that the stock was doing at least $10 million in volume. In doing this, I'm only trading stocks that are hot, right? If it's doing over $10 million, that means people are looking at them. They might have a catalyst, they're a recent runner, they're hot. Something like this, sub 1 million, no one was trading it the day before, and 1 million to 10 million, maybe people were trading it, maybe they weren't. It's iffy, but it's still able to track. So that's the two key parts I got. So the third one we're going to do after is the VWAP and the VWAP close. So I'll give you guys an example, right? Okay, great. So for example, when I say the VWAP close, what I like to do is I love to trade stocks that trade above the previous day's support levels. That shows me that they're still on the front side. So a very simple little lesson, right? If this is the closing price of VWAP on ADTX this day, right? It's something as simple as saying if we are trading above it tomorrow in this range, we're still bullish, right? Very simple stuff. If we're trading below VWAP, this is bearish. And that's part of my playing. So if I have this on watch tomorrow for a day 2 and I want to buy the week open, if it's down here, it's 2 week. If it's up here, it's valid, right? So going into the next day, this dip might look scary or it looks like it's on the backside, but we know that the VWAP close is still healthy. So these dips are still safe to trade. That's a very simple example of how I like to do things. So going back, the other thing I was looking to see is was I trading stocks below VWAP close and was I trading stocks below VWAP of that day in general to see how backside or front side I was. And those discoveries are fucked up. Do you think that's good stuff to track, or do you think I'm off? I'm not, you're the spreadsheet king.
No, I think that's all good stuff. I think you can't really, for the viewers listening and Strati, I don't think you can really go too wrong with tracking data. Like a lot of people in the webinars ask, I mean, I've probably gotten this question 25 times, like legitimately. They're like, what should I track? What should I do? And really just track anything. Like track what the weather was when you won or you lost. Like there's just there's endless things that you can track. But obviously, tracking your trades and tracking your time of entry, your risk, what chart pattern it was, like those are a lot of things that come to mind. But so many things matter. Like I remember I got very in detail in 2022 or 2023. I was even tracking my sleep score.
Yeah.
And I don't think that the data really is that important. And that's going to sound really crazy to say. But what's important is what you change subconsciously inside seeing the data. You know what I'm trying to say? So, another example is going to be, let's say you have a therapist, right? And you can't figure out why you do something a certain way. You maybe why you have OCD or why you're anxious or something to that extent, or why you have PTSD. And if the therapist is a good one and can help you figure out what's going on, just being aware of that situation is going to completely change you when that next time comes where that reaction is tested. So next time Stratty sees double, which I think he'll get into here, but when she gets into seeing a stock under VWAP the day before and under VWAP that day, he's going to subconsciously know not to click the button. Whereas maybe before he knew that he was taking a lot of losses on it, but he didn't put in the extra work yet to see the data and to train his subconscious. So when he sees a certain thing happen based on his data, you better bet that it's not going to be just because he sees a couple of numbers. It's going to be that subconscious thing trained in his head that he knows that this is not what I should be doing.
Yeah. Yeah, I feel like I've known a lot of these. Like I've known for a while that I oversize, and I've known for a while that like I trade low volume stuff. Yet until you like see it, like I'm still gonna do it. So like it doesn't really matter. But like maybe this will be the slap in the face. So I ran the data. I made these fun little charts. I don't know how the I pulled this off, but 3 days alone in a room, you start to do things, I guess. So basically February versus March, this is kind of my trading summarized. So basically February, picture a decent market condition, a lot of trading happening, a lot of runners. and March is quieter. So when there's a lot of runners, my trading style you can get away with it. And what is that style? It's taking a lot of size and just cutting immediately if you're wrong and trying to anticipate volume coming in, trying to kind of gamble more on if things are going to go up or not. It's a lot less confirmation and you're just getting it in and seeing if you're right or wrong. So the goal as a trader is obviously to have the least amount of risk and the most amount of profit. So as you can see here, I did pretty well in a few trades and 10,000 plus, almost over 25,000 here. And I was risking about 2 to 4K for the majority. 4K is the majority, a lot. Now, on the trades that didn't work out, I didn't lose 4K, 2K. That was the potential risk, right? Like we talked about. On the left here on the y-axis, this is what I actually lost. So a lot of these in here are $100 cut, $1,000 cut, lose 2,000, lose it that, whatever. And up here's your singles, make 2,000, lose 1,000, whatever. So these look good, like you're cutting your losses quickly, but the key is when you deviate away and you come to this side of the chart, and that's when your potential risk is climbing. So, for example, like I think awful trading, as you can see, is right here. I could have lost $10,000 on the trade, and I did. And even worse on these wins, I could have lost up to $10,000. So I put myself in a very dangerous position to only make 1,000 or 2,000 bucks. Right here was 5,000 bucks. So that day, with the reinforcing a habit, I probably made that 5,000, and I'm like, yeah, I'm the man, made 5K today, but not realizing that I put myself in such a dangerous position that there's going to be another time when I do that and I'm going to get fried for 10,000. So it's not good trading. Just because you're green doesn't mean it's a good trade. And I think that's a realization that a lot of people need to have, like myself included. Like, you know, I was risking $8,000 here, I made 1,000. Is that a good trade just because you made the 1,000? No. I'm going to explain why. Because when things start to slow down and you get a different market condition, you get exposed. So all the times I got away with it, right? 1,000 here, 5,000 there, 1,000. Those little wins, they come right back to bite you because it starts to add up to the negative. So I have this, it looks just about the same, right? I'm losing 1,500, 2,000. My potential risk is 2,000, 4,000, almost 5,000 here. And it looks just like it does on the top side, yet there's no winning. The biggest win here is now 12,500. So I'm not getting away with it as much. My bullshit trading is now starting to get exposed by the market condition. You can even see it here. There's less of these X's now. There was a $15,000 risk on this chart, and I bailed out almost 5 grand win. Look at how obnoxious to the right this is the worst trade in history that I've ever taken, and it's a green trade. So a lot of the problems that people have is when things slow down, whatever habit you have is gonna get exposed badly. So for me, it's my oversizing. And like you said, like with the therapy, like why do you do what you do? Well, I'm pretty confident in my ability to time those trades, and a lot of my best trades immediately go green in my favor. And I also have learned from Tim Sykes about cutting losses, so I feel very confident to cut my losses quickly. Like I don't fall in love with these trades, like I don't bag hold them and pray that they go up. I just get it in big, assume it's gonna perk, and then if it doesn't, that's when I get in the most trouble. But if it does and I'm right, then everything's all great, right? I make 20K, 25K, 15K. But when it doesn't work out and the money just leaves your account. So I would think the solution is you just have to stay within, just risk anywhere from 1,000 to 4,000. Just be okay with making less, but making a consistent 5, 10, 15 versus trying to oversize 8,000, 10,000 risk to try and get those gains, because you don't even make them, right? Like if this was correct, I was risking 10,000 here, I should be making 40, 50, 60. I still don't even have that trade. I still don't have a 30, 40, 50, 60K trade yet. I've taken a 10,000 loss. I've taken over 13, $14,000 losses. So my math is way off, but you wouldn't see it because you see this profit chart and you're like, oh, this guy's good. You wouldn't believe that this chart had all these problems, but that's the whole point of this, is just because you're good doesn't mean you can't fix things. Imagine if I fixed this in the butt 6 months ago, how much higher this could probably be, because you're in a better place, you're making consistent money, you're scaling up slowly. You probably have, how many times I probably took a fat like 10K loss and it screwed me up the next day. I didn't get to make as much money as I could have because I wasn't in a good place. So it all connects. And basically, March is basically just exposing me for what I really am. Just kind of stinks. But, it is what it is.